I have money to invest in, but I don't know what to do with it. That is a question that I've been asked numerous times in the last couple of weeks. So the common thing is that there is so much information out there, is so much different opportunities to invest in. As what I'm hearing is people are a bit confused. They don't know which way to turn. They don't know which route to go down. You can invest in shares, property, crypto. There are different ways to invest in those types of assets. But which way do you go? Or I'm even having people come to me with these magical computer trading platforms that are going to trade the market and give you guaranteed returns, or land banking schemes when it comes to property of areas of land that aren't even developed yet. So there's a lot of things out there, and it can be hard to know which way to turn or which way to move forward. Anyway, hi, I am Michael Scarbossa, a personal finance enthusiast, and I've had a long career in constructing railways. Um, my goal is to make money simple for you by sharing simple step-by-step actionable strategies to help you grow your hard-earned money and shortcut your path to retirement. Now, this is an area that I've been researching for well over 20 years, something I'm very, very interested in. And I've been researching that to learn for myself how to build wealth better for my family, to give better choices for my family of how we want to live life. And what I want to do is just share with you everything that I've learned of what to do and what not to do to help you on your path, for you to work out what's the best path for yourself as well in regards to building wealth for your family and managing your own money. So in that, and I'll leave a link in the comments below this video, my website, michaelscarbossa.com. I've got a free PDF there for you. And that PDF briefly explains how I went from having zero savings to buying my first investment property. I think you'll find it a very interesting read. It's quite brief, but it gives you the simple steps along the way on how to achieve that. Anyway, back to today's topic, not knowing where to invest your money and where to invest it. All very valid questions. And people are really focused on what should I invest in. But even before deciding you should invest in, there's a very big question that needs to be asked. And that is, what's your ultimate goal? What are you looking to achieve by investing your money in property, shares, crypto, whatever that might be? Crypto's not a place that I go to at this point in time, by the way, but we'll just park that for now. So when I ask people, that question, well, what do you want to achieve? Almost always the answer is something like, well, I want to live off the income from my investments. So that's what we call passive income. You've got money invested. The proceeds of those investments are actually large enough to pay for your lifestyle, and that's the magic thing that we all want. And what that basically means is that you can retire from whatever you do now that you do to earn income, if you don't want to do that anymore. So it's plain and simple. Now, to be able to start with that, you need to know what your annual number is. You need to know where you're at. So you need to know, how much does your annual lifestyle actually cost you now? So, how much it costs you to your ongoing living expenses, your debts, so your car loans, your credit cards, which is probably tied up with your living expenses, school fees, your mortgage, all of that sort of stuff. Knowing exactly where you're at from a financial perspective, what does it take you? What does it cost you to live? Oh, and of course, importantly, the things you like to do that make life fun as well. So if you cut all that out, life's not going to be very fun. Then what's the point of being here, right? So you got to have some fun along the way too. So with that, by determining how much your lifestyle costs you now, you also need to consider what does the future look like as well. So, and there could be some unders or overs in that. For instance, you might have kids going through private schooling at the moment, quite expensive school fees. Maybe in 5 years' time, you won't have those fees anymore. So there's some more disposable income that you may have that will change what the cost of your future lifestyle looks like. On the flip side of that, there's also what I like to call me inflation. So, as we get more wealthy, and we just like to lift our lifestyles, we like to, live a little bit, lift that lifestyle, have a nicer car, nicer home, maybe go on nicer holidays, eat at nicer restaurants, all that sort of stuff. So you've got to factor in a little bit of, okay, what's your increase? And I'm not talking about going all out and having the most opulent lifestyle ever. It's just what's that next step that you would like to have? You should really factor that in. Now, once you put all that together, then what you get is your annual number, and that's the number that you need to achieve with from an income perspective from your investments. So you've got money invested. That money invested is giving you an income on an annual basis, or be a monthly basis, or whatever, but it'll add up to an annual number. Once that annual number surpasses what you need to live and how you like to live life, voila, you're there. That's the key. Now, a lot of people, any I guess any money that you then develop beyond that point, well, that's the cream, right? That's then you can decide to do whatever you want with it. You might want to decide to live life more opulently. You might just want to blow that cash. You might want to invest it more wisely. You might want to give it away to charitable causes and that are close to you. And I think that's a great thing to do. Many people have a desire to do that, and yeah, I do that now, and I continue to do it. Love to do it at a bigger level, but it's a bit like the airplane analogy, right? You put your own face oxygen mask on first before you help someone else. Same here. Money's your oxygen. You need it to live. Get yourself sorted, and then you can do what you want with the rest of it. It's as simple as that. What are those things you would love to do if the way you live your life was now no longer limited by money? So think about that. Wouldn't that be awesome? Anyway, so now we have a starting point, knowing where you're at, knowing what your number is. You need a strategy to be able to achieve that number. Um, how to get there, that strategy drives your investment choices to be able to achieve that ultimate outcome. Now, this is where people get very confused because there are very many different options on how to invest your money. What's the right choice to make? And when it comes down to making the right choice on how to invest your money, there are really three big mistakes it all boils down to. These sort of underpin everything. So the first one is not having an investment strategy, which is what we're talking about now. People come along, I've got a bunch of cash, I want to invest it, and they're focused on what can I invest it in without really thinking about what they want to achieve, what's the ultimate outcome that they want to achieve. So they just jump into something, not really knowing the consequences of that investment or maybe how long it needs to be invested for. And that can then have a negative impact on when you want that money back, about how well that money has grown. So not having an investment strategy is a big mistake, and that's really key here. So it's your roadmap, it's your game plan of how you're going to get there, how you're going to achieve your number. It is so very important to get that strategy, because once you've got that strategy, the choices around where you invest your money become easy because you've built that into your strategy. And now it's like, okay, I get this bit of spare cash or extra cash, or I'm striving to save money in other ways, and you knowing exactly how you're investing that to get to the goal that you want. Now, the other thing so mistake number two that many people make when it comes down to this, in investing money to grow your money, is number one is not having investment strategy, but number two, without that strategy, is there's all these options. I don't know which one to take. So they take a punt. They think, okay, this is the best option for me to take to invest my money, maybe in EFTs or whatever it is. And you go charging down a path and you invest your money into something that you don't really understand. And this is where things can get a bit nasty. And sometimes a bit of a case is you don't know what you don't know. And that's where things are really dangerous. So what you've got to be careful of is where you invest that money and just taking a punt, right? So the last thing you want to do is take that hard-earned cash, go down a path that may be actually not the best strategy. So that's something you've really got to be careful about. And many people make this mistake, but they make it unknowingly, and it's not their fault. It's just that we don't know what we don't know, and we haven't had the education to understand the risks around that particular investment, how that particular investment works ultimately, and what the consequences could be. A lot of people focus on the upside, but if there's big upside, there's also to have potential of big downside. So remember that things can go both ways equally in the same direction. Either high or very low. So just keep that in mind. The third big mistake that people make is they do nothing. That's right. Confused. There's too many options. I don't know what to do. So they sit on their hands and they do nothing. Now, I get that, right? Because this is the flip side of mistake number two, you're scared of making the wrong choice. And there are plenty of places to invest your money that are very, very risky, and you may not know it. So that fear is real, and you're right to have that fear. Absolutely, you're right to have that fear. But what that fear should be doing is driving you to find out more information about those particular investments. But sitting on your hands and doing nothing is one of the worst things you can do, because building wealth is very, very sensitive to time invested. Okay, so by not starting, you're losing time. And when you lose time, you're losing the ability for your investments to compound over time. So that compounding interest principle, over time, it grows exponentially. So if you cut a few years off that, you're missing out on the best portion, the exponential portion towards the end of when you want to access those investments. So that's where the power really comes into play, and your investments really grow to the next level. So if sit on your hands, you're losing time. You do not want to miss out on that. Okay, so I've just talked about three big mistakes that people make around investing their money. One's not having a strategy. Another one is what I call taking a punt, jumping into something you don't really understand or know where it's going to end up or what the risks are. The third one is sitting on your hands and doing nothing and losing time, that precious time that could be growing your money. So how do you overcome these big mistakes, these three big mistakes? Well, my first suggestion would be is to keep things simple. Focus on lower risk passive investing strategies rather than higher risk active investing strategies. Okay, so I just mentioned passive investing, active investing. What the hell does that mean? I'll just briefly explain that to you now. So if you're interested in shares, investing in index funds is what I would call a passive investment strategy. So index funds are one of the safest ways to go and invest in the share market. Okay. So what is an index fund? An index fund is basically a fund that buys the majority of the companies across the share market or in particular sectors. So you're very highly diversified across the share market, and all that is in that portfolio. They generally have really low fees because there's not a lot of trading that gets done, and you've got computers that look at the balance of the portfolio and keeps it tracking closely to the market. So it very closely tracks market performance overall. Not exactly, but very, very closely. And if you look at any share market, like the ASX, the ASX share market growth over time, you can see it's fairly consistent growth over time, and your portfolio would follow that. So the key with investing in index funds is, you're investing for the longer term. You want to be in there for at least 7 to 10 years to make sure you iron out any market cycles, you get past any dips that happen along the way. Now, just on index funds, so you may or may not have heard of a gentleman by the name of Warren Buffett. If you haven't, Warren Buffett is one of the most successful investors of all time. So very, very successful investor. He said something quite a few years ago, which is really paramount. And he basically said, if you don't have the education around assessing companies' fundamentals and understanding what their intrinsic value is, so if you don't know what any of that means, maybe you should be investing in index funds, then the safest place to invest your money is in index funds. And over a 10-year period, you're most likely going to be better off and outperform 90% of the people that are out there that are invested in the stock market. So that's a really powerful statement, incredibly powerful statement. So, index funds are a really good place to invest your money in the stock market. If you know nothing about it, low fees, track the market, highly diversified portfolio. You're not exposed to, there might be a couple of companies that tank or even go bust. You're not highly exposed to that because they're just one of many companies, and your exposure to that is very low. On the converse side of that, if you're picking stocks out and buying directly yourself into individual companies, okay, you might be buying some blue chip companies, so be it, that's all good. But maybe you're buying in some small cap stocks as well, so not blue chip companies. Now, what happens is you'll amass yourself a small portfolio of companies, but it's not very diversified. So your portfolio is very sensitive to the performance of those individual companies, not the market as a whole. Now, that's what I would call active investing. You could ramp that up a notch and try and do day trading or something like that. It's very active investing, very high risk, particularly if you don't know what you're doing. And of course, in between that, there's mutual funds, hedge funds, ETFs, a whole bunch of stuff in between. I would recommend engaging with a financial advisor if you want to look into that sort of thing. But until you've probably got at least a couple of $100,000 sitting away there in your super or an index fund, I wouldn't go down the path of engaging a financial advisor because that's higher fee. So it's a balance thing. Okay. Now, the same goes for property as well. Okay, so the key thing about property is you need to understand how to own and manage a property and be a landlord, plain and simple. To be honest, that's the easy bit. That's not actually that hard to do. Um, but what the hard thing is about property is buying the right property in the right area. So no one wants to buy a property that underperforms the property market year on year and you get low growth out of it, because the whole point of buying property is to get high growth. That's what we all want. But so how do you do that? Well, you engage the right people. You engage property professionals who have departments that day in, day out, full-time departments, are researching the property market and determining the best places to buy. And I use some property investment companies to help me do that when I choose the places that I buy investment property in. So that's obviously a very smart thing to do, and that's what I do. So you might be saying, well, that all sounds great, but what does Michael do? Well, I've just given you a few hints. I've worked out my strategy. I've got a mix of share market and property investments, and I'm including my super in this as well, because your super, or if you're in the States, your 401k, or in the UK, your pension, that is your money too. It's all part of your whole investment portfolio, and quite often with super, we're in the stock market, right? But if you're investing outside of that, where do you go with your shares and your property? So with my strategy outside of that, I've got a mix of shares and property. For a long time, I invested in index funds from a share market perspective. I've grown my money to a significant number now. I actually manage a financial advisor to manage my share market investments through managed funds these days, and I get better returns as a result of that. But I've sort of, I was in index funds for a long time, and I absolutely, if you're starting out, that is the best place to start, without a doubt, in my opinion. Okay. And I buy new properties, and I use those property investment companies. I don't use one; I use a couple, and I use their research departments to find out, okay, what's the right thing. I've got a whole bunch of other criteria myself as well of how I weed out things in that environment. So um, that's pretty much it for today. I talked about knowing what your start point is, what your final number is, getting a strategy, not making those three big mistakes, and if you want to invest in property or shares, there's a couple of options to go there. Or like I said, I do both. If you want to know more details about these strategies and exactly what I do, feel free to direct message me or ask a question in the comments about that. I'm really happy to share everything that I know and I've learned around this space. And you can also research the previous videos I've done. I've gone into detail in some of these areas in my other videos as well. So you can have a look at that. Like I said, go and have a look at my website. I'll put the link in the comments below. Grab that free PDF of how I went from zero savings to buy my first investment property. That gives you the bones of a strategy that you can use. And I hope you've had great value out of this today. And have a great day. Have a great week. And I'll see you again next week. Thanks very much. Thanks for being here.